Okay. The hell was that? Okay. So let me just double check this. Make sure everything is working. Okay. What's up, guys? This is Ty Zen, and in this episode of currency analysis, guys, I want to show you guys how to analyze the price trend of Ethereum. And Ethereum's have been a big run up lately. So I just wanted to go over this analysis with you guys. All right, let me turn this off here. Okay, so this is what I'm going to cover real quick today, guys. This will be just a short broadcast here. Hopefully I can get this done in like 15, 20 minutes because I've been getting a lot of requests from my friends and from everyone online to follow up with my Ethereum price prediction for 2016. So been doing a lot of traveling the last couple of days while the price of Ethereum's been running up. And I just wanted to take a few minutes here, guys, just to update you guys on this, okay? So in today's objective, I'm going to go over what makes an uptrend, what makes a downtrend, how to draw a trend line, and then how to use a trend line to identify a few things that's essential to trading. One is your entries, the other is your exits, your stop losses, and your profit targets. And just in case you are new to trading, guys, the entries just gets your foot in the door on the trade, and the profits comes from your exits, okay? So always keep in mind that you want to know where your exits are at so that you can make money on the trade. Otherwise, you're not going to make any money. It doesn't matter. It does not matter how good your entry is. If you don't have a good exit, then you will not make money. All right. So let me just check real quick here. If you guys can hear me, I just want to do a quick sound check, guys. If you guys can hear me, can you guys let me know at the bottom of the YouTube broadcast, the YouTube video? And if you guys want to join me for this and ask questions instead of typing it in, you're welcome to use the link and join the Google Hangout. Right. So if you guys can hear it, please let me know in the comment section below the YouTube. Are you able to hear me, Eric?
I'm able to hear you.
Okay. All right. So Chris says he can hear me. So, all right. So I got my buddy and fellow crypto investor, Eric, with me to help out with this broadcast, guys. So once in a while you'll hear him chime in. Okay.
Howdy.
All right. So Chris says it's loud and clear, and I hear you loud and clear too, Eric. I prefer this to be kind of like a conversation instead of just me speaking only. But okay, let me just go ahead and run through this really fast, guys. It's going to be fast, and if it's too fast for you, I want you guys to do like the rapper 50 Cent says, just listen faster. Okay, so I'm going to use a few charts here. If you guys want to follow along with me, I'm going to use first the coin market cap so that it's a quick illustration of the liquidity, and then I'm going to use the Polonio X Ethereum exchange, and then I will also use the trading view as the my analysis. The trading view is probably the best charting tool that I have seen in all my years of trading. It's the easiest, it's the cleanest, and the most intuitive to use. All right. So I am going to shrink this over here, guys, just so that I can see the PowerPoints here. All right. Right there. Make this smaller here. I got my little cheat sheet on the side. Right there. Okay. All right. So what I'm going to do here, guys, before you trade anything, it's extremely important, guys, that you make sure that you trade on the exchange that has the highest liquidity. This prevents you from getting slipped. Being slipped means that the difference between the bid and the ask, or the sell and the buy. So let me pull up an example of what I'm talking about, guys. I like to trade silver also, so let me pull up silver here because this is easier to explain. So if you guys notice here on my chart, you guys will notice that the people that want to sell the silver, they are selling it. I mean, the people that want to buy silver, they want to buy it for $15.19, and the people that want to sell it for $15.23. Now, in case you forget what's the bid, what's the ask, what's the offer, and any of that, the Wall Street terms that they use to confuse the public, always remember that the sellers always want to sell it for a higher price. And that's the reason why this is 1523. So when you hit here, you are buying from a seller. Now, the buyers, every time they buy something in the markets, they always want to buy it for a lower price. So when you click this button, the people that the buyers will get their orders filled right here at 1519. The people that want to buy will get from that. So that's just the easiest way for me to get to remind you guys what's the bid, what's the ask, or what's the buy, or any of that nonsense. Okay, so let me see. Hold on here, real quick. There has got to be a better way to do this. Hold on, real quick, guys. So what I'm going to do is I got to do this. I just realized that if you guys are asking a question, I'm not going to be able to see it. So what I'm going to do is this. If you guys will excuse me real quick here, I'm just going to move that up there so I can see my cheat sheet. And I'm going to leave the comment section here so that I can see it whenever you guys have a question or something. Right there. That way I can see what if anyone has a question or not as I'm broadcasting this. Okay, so what I do is when I buy or sell Ethereum, what I normally do is I come here first and I click on the chart on this, and I really don't care to look at these line charts because they don't tell me a lot of information. So when I come here, I click on the markets tab, and the first thing that you'll see here is that CoinMarketCap does a good job of looking at, they sort out the exchanges like Poloniex and Kraken, and I'm looking at trading Ethereum and Bitcoin. I really do not care about trading Ethereum for US dollars. So could you mute your microphone real quick, Eric, if you're not talking?
Sure.
Yeah, because there's a lot of background noise. Thanks, man. Okay, that's much better because there's a lot of breathing sounds and background noise. Okay, so back to what I was saying, guys. What you want to do is you want to look at the volume here, and you'll notice that Poloniex has 57% of the trading volume for Ethereum into Bitcoin, and you notice that Kraken has 28%. So you pretty much want to pay attention to these exchanges right about there, the top four. And I'm not sure what Gatecoin is. I'm not very familiar with them, but I know that Poloniex and Kraken has been around for a while. Kraken is actually the exchange that's going to be handling the Mt. Gox issue. Some of you guys that's been in the cryptocurrency for a while, you guys know that Mt. Gox went into bankruptcy, and they're right now they're going through the bankruptcy process to distribute the missing bitcoins back to the recovered bitcoins back to its customers. And there's talk that when they finally distribute the bitcoins from the bankruptcy, they are likely to use the Kraken exchange. So that doesn't mean that I am endorsing the Kraken exchange or any of these exchanges here, guys. I'm just giving you some tidbits of information of who they are. All right. Now, so once I realized that most of the exchanges, the volume is being traded here on Poloniex and Kraken, then I go to the actual exchange itself, to Poloniex, and I notice here that the price obviously is running up. Now the charts on Poloniex, even though they have a lot of volume, guys, they have the crappiest charts and the crappiest analysis tools that you can imagine for any trading platform. And so it really sucks. So what I do is I come over here to tradingview.com. And just so you guys know, I am not paid or endorsed by any of these websites that I am using. So this is just a neutral perspective. If I was getting paid to support them or anything, I would let you guys know. But at the meantime, I am not. Okay. So if I come down here, guys, you will see that I click on Ethereum. And one of the first things that I like to do is I like to look at the trend analysis from 1 month out. Okay, hold on. Let me. I'm jumping ahead here, guys. I'm jumping ahead of my notes here. So let me go real quick. What makes an uptrend, guys? What makes an uptrend is this: is when you have a higher. Every time the price goes up like this, guys, and it comes back down, and it comes up, comes back down, and comes up. Every time it sets a higher low, that lets you know that the. Let me change this to. Okay, so if you guys notice here, I'm trying to use this tool here. Right here, guys. If you guys see that, this area right here is called a low. Right there. And if you notice, when the price ran up, it pulled back down, and then it pulled back up again. Now you can either view this, the tail, the bottom line underneath this candle body is called the tail, and the top is called the wick. You guys can look at this right here as the low, okay? Or you can look at this one as the low right here. Now this circle tool is not very user friendly, okay? So that's a low right there. Now, whenever you have consecutive higher lows, so you guys see how this low is higher than this low? Can you guys see that? If you guys see this low is higher than this low, that constitutes an uptrend. Now there are several schools of thoughts, guys. There are some traders that say that as long as they have 2 points of reference, so this would be considered 1 point of reference. This one is a second reference point, and this is a third reference point, right? So whenever they say this, some people go with 3 points to constitute an uptrend. Okay. Now, there are some people that say that the higher lows is the textbook definition of a trend, of an uptrend, is that it produces higher highs and higher lows. So this would constitute the higher highs right here, guys. This right here, this right there would constitute the higher. I'm going to color code that red, right? And matter of fact, just so that it's easy for you guys to understand what I'm talking about, I'm going to color code these spots right here green. Just so that's easy for you guys, your eyes, to see what I'm seeing. Right? So that would be a higher low, and then the red would be a higher high. So let's go ahead and throw a higher high up here. Like that. Now that's the textbook definition, guys, is that a uptrend is anything that has higher lows and higher highs. Now, to me, that's not the accurate. That's not an accurate definition, guys, because in real world trading, the buyers are the ones that are in control of the lows. The buyers, not the sellers. The buyers. So every time price shoots up, the sellers are trying to sell it and push it back down, and the buyers are pushing it back up and won't allow the price to go any lower, right? So it's the buyers that are in control of an uptrend, and the sellers are in control of a downtrend. So just keep that in mind. So in my definition of an uptrend would be that, and it's not just my definition, but it's most of the professional traders that I work with that are my colleagues, right? All our definition of an uptrend for any cryptocurrency is higher lows accompanied by higher highs. Okay, the higher highs is not mandatory; it just can accompany it. All right. So let me see here. Humjob says it's so insightful. What do you think of the median triple candlestick pattern? I'm not sure what you're talking about there, so I cannot answer. Is that a buy signal? I cannot answer that, Humjob, because I don't know what you're talking about. Can you use pink? Yeah, you can use any color you want. Okay. I'm feeling fabulous with these high lows. Okay, I don't know what that means, but oh, that's great. Okay, so I'm not sure what that means, Humjob, so I cannot answer it. Now, keep in mind, guys, I'm a currency trader. Okay, I trade the forex market, the futures market, and the stock market. So I'm using my experience in those markets to trade the cryptocurrency market. So some of the new vocabulary that I hear and see in the cryptocurrency market, I have never seen it before in the traditional trading world. So if you guys ask me, sometimes I might know what it is. It's just that in the cryptocurrency world, there's a tendency for people to use different names for the same thing that's traditionally used in the traditional trading world, and I might not be aware of what the correlation is there. All right, so that's considered an uptrend, guys. A downtrend, on the other hand, is just a complete opposite, right? A downtrend is something that is a higher high that's accompanied by a lower high, followed by another lower high. So you guys see that there's one high, lower high, lower high, lower high, lower high. Okay, and then that is accompanied by lower lows. So you guys see that lower low right there? This is the reason why I said earlier that it is not mandatory that it has to have a lower low. Because if you guys see this, this is a low, but this is not lower than this. It's higher than this, right? Because this is not so important as the tops. But then you guys see down here, now it's produced a lower low than this. So that's uh, that's what a downtrend is. The first thing, the characteristic that you guys want to look for is that the tops are lower than the previous ones. Okay. Any questions on the uptrend or the downtrend, guys? How to recognize an uptrend or a downtrend? Anyone? No? All right. So the next thing is, how do you draw a trend line? Okay. I get this question a lot by a lot of traders. Now, there are several ways to draw a trend line, guys. I will show you several different ways, and then you pick out the method that best suits you or what it is that you're doing. Okay. Visual Vendetta says, I am so tempted to buy right now. And I would say do not buy right now. Because if you buy right now, you are chasing price. A professional trader does not trade price. Now, if you want to be an amateur trader, you are welcome to chase price because that's what makes you an amateur trader. So if you don't chase price, then that would be an amateur. Then you would be a professional. So if you want to be an amateur trader that does not make money in trading, then you would chase after it. Okay. So do not chase after price. If you see, anytime, guys, you see long green candles like this, like that, you never ever chase after it. You see, look at this. Look at these long ass green candles, guys. Do not chase after this. If you buy in right now, you are considered a sucker. Okay, you are considered an amateur. Do not buy in right now. Okay, it does not matter if this runs up another $1,000. Okay, you do not buy in until it pulls back to a valid support level. Okay, so do not buy in right now. Okay, so I don't want you guys to think that I'm doing this analysis to pump these Ethereum up or anything. Okay, I'm just telling you guys because I see so many amateurs on TradingView and in the troll boxes that are jumping in. Okay, things like this happen in trading, guys. You will miss a move. This happens all the time in trading. It happens in the currency markets. It happens in the forex market, the stock market. It happens in the options market, the futures market. Do not chase after price. You have a certain amount of money in your account. You want to make a wise decision and give yourself the highest probability and trade with the trend when there's an opportunity. If there's not an opportunity, you sit on the sidelines with your hands under your butt and sit on it and don't do anything until the price comes to you. Do not run and chase after price. Let price come to you. Okay. So basically, right, um, the way that you draw a trend line, there are several ways to do it, okay? I personally draw it like this. I put the trend line and I draw it. There's so many lines on here. Let me just delete some of these. Some of these I cannot delete, guys. Some of the green lines that I already drew in, I cannot delete because I'm using them. Okay, so if you guys don't mind, I don't want to have to redraw it again. Okay, so what I do is this. There's several ways to draw the trend line. There is no correct way to do it. So if anyone tells you that this is the best way or something, they are lying to you. They don't know what they're talking about. There's no best way to draw a trend line. Okay, however, it is important that however you draw it, that you draw it the same every time. Does that make sense, guys? That you draw it the same every time. Okay. So let me get rid of some of these visuals right here so that you guys can see what I'm seeing. If I have limited screen space here. Okay. I draw my trend line so that it hits the lows, okay, of each of these. Now, some people will say, Ty, how come you are not touching the wicks? I do not touch the wicks, guys. What I draw is what is called a majority rules. Okay, that means that if I draw it from the corner of this candle body and I touch the tail of that candle body, let me try to magnify this thing for you guys. If you see how I draw this trend line, it touches 1 point and 2 points. If I raise it over here to this, notice how it touches that corner. That's 1 point. That's 2 touch points. That's 3 touch points right there on that the bottom of that tail. And then there's almost a fourth touch point here. Okay. So the majority rules is where when you draw the trend line, you want to touch as many of these points as you can. So if you draw it here and here, you'll see that it touches that corner, that tail, that one, and that one. So there's 4 points right there. And then if I touch it here, right, it touches that corner and that corner, that wick, that tail right there, and that tail right there. So that's 4 points. And if you guys, I don't know if you guys can see it or not, but it also touches the corner of that body right there. So the more majority hits that touch that trend line, that's what I prefer. And then you got to adjust it as the trade goes on. All right. So any questions on that, guys, before I move forward? No? Okay. Now, if you choose to do the majority rules, the majority touch technique that I just used, then make sure that you guys use it the same every time. If you guys use it from the low to the low, like this, there's nothing wrong with that either. Just make sure you do it the exact same way every time and don't change it up just because somebody else tells you something different. Okay? All right, so that's how you draw a uptrend. The way that you draw a downtrend is the exact same way. Okay, so if this was a downtrend, let me delete some of these. Oh, this one, you would draw it from the high like this to where it touches the majority. If you do the majority rules, it would be something like that. You guys see how it touches all these points right there? And it comes down to here. Now, if you use the high point method only, then it would be like that. It would touch that high point right there and this high point right here. And that high point right there. And it almost touches that one right there. Like I said, either one, it's up to you. Okay. Now, what I normally like to do is I like to use a channel when I am trading because I don't want to be outside. I want to make sure that I trade inside the channels. So here is an example of a channel. I'm going to delete this previous trend line that we just drew. And what I'm going to do is I'm coming over here to the channel tool right there, the parallel channel, and I will draw a trend line at the bottom. And what it does is I let go and pull it over here, and now I have a parallel channel like that. And let me color code it purple so that you guys can see what I'm looking at. right there. Okay. If we see a quadruple candlestick convergence on the MACD, but it's purple instead of red, is that a buy? Shouldn't we wait for random lines to start doing random things? Okay, so I don't know what you guys are asking there because those are not traditional trading questions. So one guy asked, Humjob asked for the triple candlestick pattern, and now Akiva is asking the quadruple candlestick pattern. Man, if somebody else asks me a 6 candlestick pattern, I, you guys gonna have to like purple. I I was a former art teacher, guys, so I like to use different colors. Okay. Plus, it stands out in the charts because if I have too much red and green on there, the colors of the lines don't mean anything, guys. The colors do not mean anything. Even the colors on these candlesticks don't mean anything. Okay. Because remember, the Japanese used to make it black and white. The Americans, when they brought it to America, right, converted to red and green. Okay. So that doesn't really mean anything. Okay, because whether the candles are red or green or not, I'll still be able to trade it even if it was black and white. Okay, because you can look at where the price opens and closes, and you can determine where it's at. So there's a lot of traders. There are some traders I know that are colorblind. They cannot see red and green, so they just use black and white. Okay, so now you guys notice this, right? You guys notice how the price ran up this trend right here, and it broke through and it busted right through that trend. Okay, when it does that, you got to be careful because at any minute it's going to snap back to its mean, which means that it's going to come back to here at any time, right? So be careful about that, guys. Now, what you also want to do is when that happens, right? I like to do this. I like to draw a new channel from here to here, like that. Now, I want you guys to notice that when I drew this second channel here, I'm just going to color code it a different color just so that you guys know what I'm talking about. I'm going to code that pink, right? Now, if you guys notice that the pink channel is thinner and the pitch, the angle of it is a lot steeper than the purple channel. Notice how wide this channel is, guys. Notice the width of this channel. See how wide it is? If you notice how this one is, it's very narrow, okay? So when price does that, that means that when the channel becomes thin and the angle of it is very inclined like that, that means that there is a lot of momentum in the trade. There's a lot of energy, there's a lot of fuel behind that trade or behind that move. So when that happens, if you try to jump on, like right now, you're jumping in at the wrong time. Okay. And here's another thing that I want you guys to notice. Okay. Notice how the height of this move is, guys. I want you guys to notice the height of this move. Okay. Pay attention here, guys. You see the height of this move right there? See the height from that low to that? Okay. Notice how we got that, and then we also have this. See this right here? See where it ran up to about right there. You guys see that? It ran up it started down here and it skyrocketed up to here, and then it paused and then it went sideways. Now I want you guys to pay attention to that and notice how when we move it over here and we put it at that low, this run up right here did not reach that high. But if we move over here from this low down here, notice how it ran up almost that high. And then if we notice from here, and then it went sideways. And then we notice that it ran from here all the way up to here. The bottom of that candle, right there, all the way up to here, and then it came back down. So you guys notice that? And then right here, right there, let's just say that it continues that pattern. It'll run up to here, and more than likely it's going to pull back. So what happens is if you guys get in right here, you will get slaughtered because when it comes up to here and hits that pink trend line and hits the distance that it normally travels, it's going to pull back, and you guys are going to sit there and cry about it. You guys see that? You don't want to get caught in that pullback and try to go long. So what you guys want to do is wait until it comes back and hits this trend line or this trend line and then get in. At least you're going with the trend and you're going at the bottom of the channel. You guys see how this channel is right here, this purple channel? You guys see that? Let me ask you guys this. Do you guys want to get in right here at the bottom of the channel, or do you guys want to get in at the top, guys? Type it in the chat box so that I know that you guys understand what I'm talking about. Do you want to get in at the bottom of the channel or at the top of the channel? Okay. Bottom of the channel. Exactly. Bottom, of course. That's right. So if we come up here, guys, right? Look at that. It's near the top of this pink channel, right? So getting in here would be an extremely risky trade because your stop loss is still going to be outside that channel. You guys see that? Let me do this, guys, so you guys understand, okay? Because sometimes people, the beginning traders, they don't realize the risk that you're taking, right? The dynamic duo says he's hungry. Get you some food, man. Get you some food. Get you a biscuit or something. Get you a slice of bread, man. Get you some chicken wings, right? Okay, guys. Don't be watching this hungry, man. You ain't going to learn if you watch this hungry, right? So right there, guys, let's say that you guys get in right here, right? I'm going to color code this red to symbolize the risk. In other words, if you get in right here at the bottom of this trend line and the price starts to move out of it and it closes below the trend line, you get out. Okay? You get out. If it goes up to here, then you take profits. Okay? So let's say that you go like that. And I'm going to color code this green, guys. You guys see that? So this is the risk that you take right here. This is the risk that you guys take, right? And this is the profits that you'll make. And I'm going to be conservative, guys. I'm just going to go right there because it's rare that you ever hit you get the tops and the bottoms, okay? So let's say you do that. You guys notice how much is my risk to reward here, guys? I'm risking this much, which is 1, 2, 3, about 3.25 reward for 1 unit of risk. Now in trading, this unit of risk is considered 1R. 1R, which means 1 risk. And then this up here would be considered the reward, right? So this is basically, you can say that this is 3 units of reward for 1 unit of risk that you're taking, right? You always want to do that, guys. You always want to take the trades that give you a potential of 3 units of reward or better. The reason why is because when you're a beginning trader, most beginning traders, 2/3 of their trades do not make money. Let me say that again. If you're beginning traders, more than likely 2/3 of your trades will not make money. They will be unprofitable. Therefore, when you are the other 1/3 of the trades that are profitable, you got to make sure there's enough room to get at least 3 units of reward out of it. That way, you can afford to be wrong on 2/3 of your trades and still make money. You got a bunch of amateurs on the forums, in the chat boxes, in the troll boxes that do not know how to trade. And what they do is they try to go for a 60% winning percentage, 70, 80, 90% winning percentage. When you hear people say that, guys, just stay away from them because they don't know what the hell they're talking about. A professional trader that trades with the trend usually has about a 33 to about a 43% winning percentage. So that means that they're right usually on 33 to 43% of their trades. And the reason why they can still make money is because the size of their winners are significantly bigger than the size of their losses. Does that make sense, guys? Does that make sense to you guys, or am I just not making sense? Do you guys understand that you want the size of the winners to be significantly bigger than the size of your risk, right? Type in "make sense" or something in the chat box, guys. Let me know. How do you back test your strategies? You don't. Don't waste time back testing your strategies. The way that you learn trading is to trade in the live markets with the smallest size that you can risk. So if you can risk, the beauty of cryptocurrencies, guys, I love trading cryptocurrencies because you can risk $1 on a trade. You can risk 50 cents on one trade to see if your system works or not. Don't waste time back testing anything. That's a waste of time. You guys want to learn how to trade, right? You got to make live trades and make it with the smallest size possible. The smallest size possible. If you could trade one share, you trade one share, but you can't because most exchanges, most stock exchanges, the commissions on them are like $1 per trade in and $1 a trade out. So it's not very cost effective to trade one share. But if you've never traded before, that's what you should be trading, like 5 shares, 10 shares. If you're trading currencies, you should trade like 1 micro lot, 2 micro lots. The best thing is that while you guys are trading Bitcoin, you can trade a very, very small size. You can trade like 1 millibit, 2 millibit, right? That's a decimal with like 3 decimal places after it. You trade small units and you make about 50 trades and then you average out the results of those. I'll talk about that in a different video, guys. I'll talk about how to test your system in a different video. In this video, I just want to focus on the trend, okay? Because there's a lot of people that's been asking me about the Ethereum trend and the price and when to get in, when to get out, okay? So we know that we get in at the near the bottom of the trend, guys, then we wait. So if, let's say that the price was right here, guys, we don't do anything. We just wait. We just wait, and we put our orders in near here. You guys see how this low is right there? You guys see this right here? You guys see that low right there? You guys see that? Right? Let me know that you guys see this, guys. All right, this is not a one-way communication here. We're going to do this as a team, guys. Okay? How do you guess when a steep trend is losing trend? What is the best way to predict the trend? I'm showing you guys how to predict the trend right here, guys. I'm showing you guys right now, right? So when this comes over here, right, I'm going to look to get in right there, and this is how much risk I'm going to take right there. And I'm going to get in, and I'm going to look for it to move to the other side of the channel like that. Okay? So when it hits that dotted line, that support level, that's where I'm going to get in at because it matches up with that support from this tail right here. This is what's called a confluence of support and a trend line. Use indicators, TDD. I don't know. I don't use indicators, guys. I trade off of price. An indicator is nothing but a derivative of price, right? All indicators are a derivative of price. You cannot automate what I'm talking about, guys. No matter how or what anybody says, no matter how you automate your system, your trading, it doesn't matter what your strategy is in trading. There's only so much you can automate because trading is a human activity. A human activity, right? That's just like, I'll give you guys an example because I get asked that all the time. Like, why don't you just automate your strategy? You can automate, like you can program the computer so that when the price hits this trend line, you get in, and if it closes outside the price, the candle price closes outside of it, you get back out, right? No matter if you automate it or you do it manually, right? If you're a beginning trader, 2/3 of your trades usually do not make money. That's something that you guys have got to understand. When you're a beginning trader, more than likely, 2/3 of your trades will not make money. They are unprofitable, right? Stop focusing on the strategy and focus on the risk management, okay? The trade management. What do you do when the trade goes against you? You get out. What do you do when the trade goes in your favor? You let it run, okay? We'll talk about trade management later. Let's just focus on the trend line here. I don't know what TDD is, but I don't use any indicators. So I don't know, because to me, it's a waste of time. They're all lagging. They all have to wait until price is done before they can calculate their indicators. So I don't use them, right? So when the price comes down here, now look at that, guys. What happens if you miss this move? What happens if you miss this move because it never hit the trend line? It's okay. It's okay. You just wait, lock and load, and wait for the next trade, right? The dynamic duo. Okay. Oh, you're talking about the the viewer dynamic duo. Okay. Okay. You would be happy to send me some links. I'm not sure what kind of links you're going to send me, Akiva, but this is how I trade, guys. This is how I trade off the trend line and off support and resistance, you know? So so what happens is this, guys, you can send me all kinds of links, but I'm not going to change my strategy because it's already making me money. So I'm not going to go waste time. I already know that I have a system that's making me money, so I'm not going to waste time learning a new system. The hardest thing in trading is to stick to your stop losses, you know, because 2/3 of my trades are not going to make money. So I have to be disciplined and resilient and have the mental toughness to get out of those losses when I have them. So looking for a new strategy is not going to change anything because whatever strategy you use on the market, the highest winning percentages are usually around 60%. But keep this in mind, guys. If you use a strategy that wins over 50% of the time, you're giving up something to get those winning percentages. So don't think that you have a high winning percentage and that's the end all be all or that's the holy grail, right? Most of the time, my winning percentages are between 36 to 38%, but I make money. That's all that matters. Okay, is that you make money. Don't worry about how many times you win. Worry about what the net profit is at the end of the month. Okay, so what right here, guys. So this trade comes up, right? So now you can adjust your trend line to touch this like that. I messed it up here. I don't know of any traders that back test. It's a waste of time. Only the amateurs back test that stuff, guys. Only the amateurs. The guys that don't make money in trading waste time back testing. The guys that trade and learn to trade for real, they trade with a small size in the real markets. I'm just telling you that because I don't see any. Um, yeah, I mean, if it works for you, you know, I'm not a hedge fund. I'm not a hedge fund manager, so I can't speak for the hedge funds. You know, I'm not saying it's wrong, guys. I'm just saying that individual traders at home that trade at home, right, that manage their own accounts, they're not managing millions and millions of dollars for somebody else, right? I cannot speak for that because I don't manage millions of dollars, you know. And if I say that, I would be lying to you, right? I have friends that are hedge fund managers. I have friends that, but I cannot do what they do because I don't have the kind of money they do. You know, when you have several $1,000,000 in your account to trade with, you get all kinds of good rates and good deals with the brokers. You get first priority in getting your trades filled, right? So I use TradeStation, and when I trade stocks at TradeStation, I know for a fact that if you have a bigger account, they fill your orders first. They say they don't, but I went to a trade show one time and I called out one of the TradeStation software developer and one of the engineers, some of the engineers that were there at the trade show, and I called them out. I said, "Hey, man, you guys are giving first priority to guys with traders with bigger accounts," and he was like, "No, we don't." And I said, "Yeah, you do, because I put orders in before other traders and I see them getting filled before me." Right? And they wouldn't argue about that. The reason why they don't argue about that because you can sue them for that if they say no, they don't, and you can prove that they do. Okay, so just be aware of that, guys. That if you're a hedge fund and you're listening to me, you should go and listen to other hedge fund traders and see how they trade. You should not be listening to me. If you're an individual trader trading 5, 10, 20, $30,000 of your own money, then it's worth your time to listen to what I'm saying. But if you're trading millions of dollars, and 10, 20, $50 million, you need to go listen to another hedge fund trader and do that. Okay. All right. I didn't mean to get off track there, guys, but I just don't want you guys to think that I know how to do that when I don't. Cool deal. All right. Okay. Is this helpful, guys? Do you guys understand how the trend works? Hell, I wish I had millions too, Dynamic Duo. I know Eric wishes he had millions too, but you know what? We don't, so we got to work with what we have, right? You know, if Ethereum runs up to $10 or $100 an Ether, right? Then we can be millions, and then I'll go hang out with the hedge fund managers, figure out how they do it, and I'll relay it back to you guys. The price is headed in the next few hours. Okay. I'm not sure if you're saying that I provide solid review of trading fundamentals, Chris, or if you want me to cover solid review of trading fundamentals. Hey guys, if I talk about solid trading fundamentals, man, it will be so boring that everybody would log out. The reason is because trading is not what people think it is. Okay, everybody's focusing on entries and nobody focuses on exits. It's the exits that make you money. Okay, if you're gonna learn how to trade, guys, this is how you learn how to trade. You learn what to do when the trade's going against you and what to do when it goes in your favor. Those are the two skills that you got to learn. The third skill is the size of each trade. Okay, the size of each trade is a huge important factor. Okay, everybody wants to know what the price of Ethereum is going to do in the next few minutes or next few hours. Here's the problem, guys. This is a vertical price. It's not even really a trend because it's so vertical, all right? Which means it'll snap back at any moment. So when that happens, we got to go to a lower time frame, right? So when it goes to a lower time frame, then we can see what's going on. So when we drop to a 15-minute time frame, oh, speaking of time frame, guys, I'll talk about how to use the time frames in a separate analysis video. But just so you guys know, when you guys trade, right, use the 1 month time frame, the 1 week, 1 day, 4 hours, the 1 hour, the 15 minutes, the 5, 3, and 1 minute. Notice that I did not say 45 minutes, 2 hours, or any of that nonsense, okay? The reason why is because you want to trade on a chart, a time frame, where there's a lot of eyeballs looking at it so that the traders are probably using this, you know, looking at the same charts. I have never seen or heard of anyone ever trading on a 45-minute chart. Never. I've never let me see, I've been trading since 2008, since the beginning of 2008. That's 2008, 9, 10, 11, 12, 13, 14, 15. Been trading for over 8 years now. I've never heard or seen anyone trade on a 45-minute chart before. People trade on 1-minute charts, 3-minute charts, 5-minute charts, 15-minute charts, 30-minute charts, 1 hour, 4 hours, 1 day, 1 week, 1 month, but not 45 minutes. Now, there's a few amateur traders that think they're going to get a head start or a head read, or they're going to front run everyone. No, they're not. They're just a bunch of amateurs. Okay, don't waste your time listening to that nonsense. Okay, so you got to drop. I'm going to drop it down to a 15-minute time frame, guys, and I'm going to slap on a parallel channel again, right there. Now, again, guys, I'm going to say this again, guys. I use the majority touch rule. So I'm going to, right here, the majority of the touches are right there. Okay? The majority of the touches are right there. That's where I'm going to do it. Now, if you go with the tails, then you would do it like that. You can also do a majority touch like that too, because it's touching that tail, that tail, that tail, and this corner right there. And then I would do it like that. So right here, now, if you were looking to trade short term, you were trading to trade short term, then you would have gotten in right here, right? You would have gotten in right here, and your risk would have been like right here, right there, right there. That's the problem with the steep angles, guys. The steep trends like this, the risk is a little bit higher, right? Because this is the, you're going to get in right here, and you're going to put your stop loss below the low of this. So if price comes down to here and stops you out, you're done. You're out. Okay? So now when you do that, look at this. your gains, right? Now, I want you guys to notice how I measure the gains here, okay? I want you guys to pay real close attention here, right? I want you guys to notice this. Notice how when the price runs up, it goes one candle, two candles, and then on the third candle, it runs up. One candle, then it goes sideways. One candle, two, three, four, five, six candles, then it runs up, right? The problem is when it ran up, it never ran up to the other side of the channel, right? Yeah. So that's what I do, dynamic duo. I put stop losses at the previous low. Okay, so this is a previous low, right? Now notice how this one did not run to the other side, guys. So just be aware of that. Okay, just be aware of that. Okay, so when it does that, you come up here and you'll notice that the spacing, notice the spacing, guys. Notice the spacing here. Okay, notice the width from there to about there. Notice the spacing, how wide it goes sideways, right? So when it's here, okay, see how the price is in there, guys? So let's say that we hit buy right there. Okay, I thought this was a simulator, but it's not letting me do it. Okay. It's not letting me do it. Okay, let's just do this, guys, just for practice right here. Let's say that we make a trade right there. We get in right there. Okay, so my stop loss, when I get in right there, my stop loss is going to be right here. And you got to put that thing right away because you never know what's going to happen. So that's my risk, right? The problem with making short-term trades, guys, the problem with making short-term day trades is that it's very difficult to get 3-to-1. Just be aware of that. When you're making day trades, it's usually like 2-to-1. Your winning percentage is a little bit higher. It's around probably 40%. Okay, it's usually around 40%, but your reward is not that high. Okay, so when you do this, notice how the width of this, the price goes sideways. What you do is you measure this, and more than likely, the price is going to go sideways up to here, and then it's going to hit somewhere about there. Okay, which is, so you're basically doing this. You're basically risking, this, guys. You're basically risking 1 unit of risk, right? You're risking 1 unit of risk for 2 units. I'm going to clone this so it's easy. You're going for a trade that pays like 2-to-1, and that's normal, okay? And that's normal in a day trade, because that's what this is, because you're trading on a 15-minute chart. Now, I personally do not like trading on a short time frame like this because you get stopped out more frequently. You get stopped out a lot. Okay, I don't like doing that. Okay, I like to trade and stay in the trade long enough so that it gets a longer move. Like I like to capture this entire move like this, these big moves right here, all the way up. Okay, because it's the same risk. See that? I mean, if you risk this down here, you're risking to go all the way up there. But when you do this right here like this, right, you got to make sure that if you're going to day trade and you take these types of aggressive trades right here, that you better have a good entry. You have a good winning percentage of at least, close to 50% winning percentage. Otherwise, the math will not work. Okay, the math will not work. Okay, so right there, what we'll do is we'll see how this trade plays out. If it comes up to here, we'll take profits. If it comes down to here, we just get out. Okay, so don't frown on it. How often will you guys get stopped out, guys, as a beginning trader? Let me see if you guys were paying attention, guys. Pop quiz. How often are you going to get stopped out when you're a beginning trader? You guys remember what I said? 2/3. 2/3 right there. Dynamic duos listening. Chris is listening, 66%, right? So if I put on 100 trades like this, more than likely 66% of them will get stopped out. Now, because this is a short-term trade, to be fair, it'll be a little bit higher. It will be a little bit higher, just so you guys know that. Okay, it'll probably be like around, I don't know, around like 40, 45 to 50%. Now, if you're not hitting those numbers, then you should not be taking these short-term trades like that. You should back out to like a 1 hour or a 4 hour chart and take those trades. Okay, like for me, taking these trades are extremely risky. So right there, I just got stopped out. Right there, guys, I just got stopped out. Okay, it hasn't touched yet, but more than likely I got stopped out. In the real world of trading, the spread would have stopped me out right there. Okay, so that trade is, you can just drop that in the books as a loss right there. Okay, you just scratch that trade as a loss right there, because in the real world of trading, that would have stopped me out. Even though it hasn't touched the line yet, that would have stopped me out. Okay, now did you guys notice the price just popped up? Did you guys notice that? I want you guys to notice something. Did you guys just notice the price pop up? Right? Did you guys notice that the price was down here and it popped back up like right there? Did you guys notice that? That's extremely important to know that, guys. What just happened? What caused the price to just pop up all of a sudden like that? What caused that, guys? Okay. Nobody knows? Okay. Dead cat bounce. Nah, well, see, you can call it a dead cat bounce, guys, but the problem with calling it a dead cat bounce is that what does that mean? What does a dead cat bounce mean? Whenever you hear traders say things like that, it's really hard to learn how to trade from that type of information, because what's a dead cat bounce mean? Buyers, right? What happens is this, guys. What happens is this. There are two types of people, okay? There are people that miss this move up here and they want to buy down here, okay? So there's people that want to buy down here, right there. They want to buy right there at the green line, right there at the green line. So what happens is when the price hits it, it triggers. It triggers right there, their orders, their limit orders, and they all get filled. All the traders that want to buy long right here, all their orders get filled right there, so it pops back up like that. That's what that is. Okay? So a dead cat bounce is a bunch of buy orders coming into the market all at once. Okay? Now to me, saying that a bunch of buy orders just got filled, pushing the price up, makes a lot more sense and is useful information to me as a trader versus calling it a dead cat bounce, because I don't see any dead cats on here. I don't see any cats. All I see is candles and prices. So calling it a dead cat, and I'm an artist. I'm an art teacher. I'm pretty visual, but I still don't see any cats here. Okay. Now, I know Robert Kiyosaki from Rich Dad Poor Dad. He was the one that made that popular. He made that term. I don't know if he invented it, but I know that he was the one who made it popular, the term dead cat bounce, okay? But to me, that's not a dead cat bounce. That's just buy orders getting filled, okay? There are a bunch of short-term traders and scalpers that just want to get in right here and they buy, okay? For me, the price came outside the zone. It went below this low. It closed outside the trend. So even if this did not trigger my stop loss that was here earlier, more than likely I will get out of that trade simply because the candle closed outside the trend. Okay. All right. Yeah, the dead cat bounce. Yeah, just so you guys know, a small retracement, okay? A retracement is nothing more than people taking profits, guys. There are a bunch of short-term traders that sold short right here, and now they're taking profits. So what do they have to do to take profits? They got to buy to cover. They got to buy to cover. So when they buy, what happens to the price? It pushes it back up. It pushes the price back up. Okay? So that's Oh, would I redraw the trend lines? Yeah. So every time the price does this, it breaks the trend line, then you got to adjust your trend line. So I would redraw it like this, right there, either right there or right there. Okay, like that. Now here's the thing though. I don't like it when a trend line is that low. Just so you guys know that, okay? I don't like to trade something when the trend line becomes that low. Just so you guys know that. And let me show you what I mean by that. When the trend is at like a 35-degree angle like that, a 30-degree angle to like a 60-degree angle, that's the ideal trend that I want to jump on. When the trend is vertical like this, or when it's flat like this, it's really hard to trade it. The reason why is because when it's flat like this, there's not going to be a lot of movement, okay? And when it's like this, there's going to be a whole lot of movement that is going to, so this is going to be a lot of movement, okay? That's going to really scare you, okay? Yeah, you got a new trend line. Every time the trend line gets broken, you have to readjust. Now, here's the thing, guys. If you draw a trend line on the short term, okay? So let me just show you guys this, okay? If you draw a trend line on a 1 minute like this, right? If you draw a trend line on a 1 minute, this trend line is not going to be as strong, okay? It's not going to be as strong. If you draw this trend line like this on a 1 minute, this is not going to be as strong as a trend line, right? That's 5 minutes, like this, okay? A 5-minute trend line is going to be a lot stronger and has more validity, and the chances that that trend line is going to hold is going to be higher, simply because on a 5-minute, there's more volume traded in the 5 minute, okay? There's more volume. If you go to the 15 minutes, there's even more volume being traded on a 15-minute. So the higher the time frame, the more likely that the trend will hold. If you do it on a, right, like that, more likely it will hold when it comes down to here, right? More than likely it will hold, okay? Now, some of you guys are watching this right now, guys. Some of you guys are watching this, and I know what you're thinking, because I used to think like that when I first started out trading. Some of you guys are thinking, man, you should have stayed in that trade, Ty, and not get out, because it's going back in the direction that you had anticipated. Well, here's the problem, guys. Here is the problem, okay? What happens if I don't get out and the trade does this? What happens if I don't get out and the trade does this? Okay, let's look at this. What happens if I don't get out and it does this, like it did in the Dow, or it does one of these? Okay, I cannot afford to risk that. I cannot afford that in my account. So I will get out, okay? Because there's no law that says I cannot get back in. Do you guys realize that? There is no law that says that I cannot get back into the trade, okay? So I normally do this, guys. I normally use my trend lines on a 1 hour or higher. It's rare that I use a 15-minute, okay? Because the chances of you getting stopped out on the 15-minute, 5-minute, and 1 minute are very, very high. So on this particular trade, right, if I'm trading this on a 1 hour, I see that it's coming back down to the trend line. So this is where I would likely get in right here. I would get in right here, okay, right there. Let me draw this, okay. I would get in right about there. Okay, I would get in right there. So what I do is I actually do this. You see where the low of this, guys? This low right here? right there, the low of that. So I just add 10 ticks above it. Right? So that's 95. I put it in at right there. See how the price came in here into this area and it popped back out, right? So what I normally do is, like when I'm trading currencies and stocks, I put it here and I put it 10 ticks above it, and that whole area is where I want to get in. And then I put my stop loss 10 ticks below it. Okay. In this case, 10 ticks is going to be too wide for this. Okay, 1054, 44, right there. Somewhere right there. Right there. So let me just magnify what that looks like. So I just go to the low of where it's the launch began, and then I put in just 10 ticks above and 10 ticks below for my stop loss. And then whatever the width of this is, I calculate my position size to make sure it's correct. And I usually only risk a quarter of 1%, guys. So if I have a $10,000 account, I'm going to risk a quarter of 1%. So 1% would be $100. A quarter of that would be $25. So the size of my stop loss right here would be only $25 or less. Okay. What if it's broken? Bitcoin Medellin. Hey, ¿qué pasa, Bitcoin Medellin? Okay. Are you in Medellin right now? What if it's broken, but then it goes back inside the trend again, like explodes up like right now? Ethereum is moving back up into the trend line that you created. Okay, so that's a good question, right? That's a good question because sometimes that will happen. So let's drop down to a 15-minute, right? That does happen. So what I do is this to answer. That's a good question. So what I do is I give myself, okay, I give myself 2 bullets. Okay, let me say that again. I give myself 2 bullets. What I mean by that is that I will take 2 shots. Okay, I will take 2 shots. On a 15-minute chart, I will take 2 shots. On a larger time frame, I'll take up to 3 shots. Okay. In Poblado, Medellin, ¿estás en Colombia? Poblado, Medellin is in Colombia, no? I'm just asking if Bitcoin Medellin is in Colombia here. Okay, so here's the thing, guys. If I get in, oh, okay, está bien. Okay, so there's my stop loss right there, guys. Right there. I would get in right here, and there's the red line is my stop loss. And then I would take, you guys, notice what I'm doing here, guys, just real quick. If I get in right here, notice that this is my risk. Este es mi riesgo. I did not know that there was Spanish people listening in, guys. So I would try to explain some of this in Spanish too, so they can understand it. Okay. So esta es mi ganancia aquí. This will be my reward here. Right? So you guys see that? I'm risking this much to make this much. This way, my wins are significantly bigger, and what that does is it allows me to have a lot of losses and still make money in trading. Okay, so now I hope that makes sense to you guys. Bitcoin Medellin asks, hey, if it goes back up, what do you do? Right? So what I do is this, okay? What I'll do is where I originally got in at was right here. Remember at the bottom of this tail? That's where I originally got in at. And my original stop was below here. Okay? So what I do is I will get back in right there. And I'll put my stop at the low of this. Right there, like that. Okay? I'll put my stop in right there. So if it comes back up to here, then I'll get in. Okay? Si el precio llega aquí otra vez, sube aquí, voy a entrar otra vez aquí y voy a poner mi stop loss aquí. Okay, I'm gonna put my stop loss here, get in right here, and I will continue to take profits up here. The problem with this, guys, the problem with it is, look at this. How much risk am I taking? I'm taking that much risk, and how much reward am I getting? You guys see that? If you do that, you got to have a high accuracy. Does that make sense, guys? Okay. All right. So we talked about the entries, getting in where there's a confluence of support or resistance against the trend line. We talked about the exits that that we get out at the last low, right? And then we get out. The profit targets is on the other side of the channel. Okay. Now here's the thing, guys. Here's something else I want you guys to be aware of. Okay. Sometimes, right? I like to do this. I like to get in on the long-term channels like this. I like to get in on the long-term channels like this. Right there, like that. See that? I like to get in like that. And then when the price comes back down to here, into this area, that's where I'll get in. Put my stop right there. So I'll get in anywhere in here. Anywhere in here, I will get in. Right there. Like that. Okay? The reason why I do that is because I can risk this much. I always check to see how much am I risking. Right? I'm going to risk that much. If I'm wrong, I'm going to lose that much. However, if I'm right, which is going to happen a third of the time, then I can, that's 1 unit of reward for me. That is 2 units of reward for me. And there's 3 units of reward for me right there. Okay. Actually, this is going to be about 4 units of reward. The reason why I say that is because you guys see how wide this is when it shot, the price shot up, right? Notice how the price shot up and there's 1, 2, 3 candles before it shot up again. There's 1, 2, and it shot up, right? So more than likely, when the price comes down to here, it'll go this way and it'll stagger like this. It'll be more like this. Like that. It'll come up like that to somewhere around there. Okay. Will it hit $10 this week? Okay, now I'm looking at these charts, guys, in Bitcoin. So when you guys ask me how much it is in dollars, it's really hard for me to compute because I'm used to trading everything in Bitcoins, not in dollars. I trade currencies, stocks, and futures in dollars, but when it comes to so that it's easy for me to understand and remember, every time I trade, you know, whether it's Ethereum or Bitcoin or Doge or NXT or any of that, I do it in Bitcoin so that I can keep track of what the value of it is each time. Okay, so $10 would make it. What's $10 in ethers right now? 0.04. Nah, I don't see that. And here's why I don't see that, Bitcoin Medellin. Okay, Bitcoin Medellin asked if it will reach 0.04. I mean, anything can happen. So I'm not going to say no, but the probability of that happening is very, very low, in my opinion. And here's the reason why. Okay, here's the reason why. If you guys watch my Ethereum price prediction, right? Right now it's $4.2. Wait a minute. If it's okay, right now it's $4 and it's at 0.01, then $10 should be right around 0.02. It should be around 0.02. It wouldn't be around 0.04 because that would be 4 times. Okay, yeah. Yeah, I think what the dynamic dual has, 0.025, that would be more realistic. Okay, so let's just say this. Let's say this, okay? Okay, let me go to this, guys. I'm gonna go to the 4-hour chart here, and we're gonna go to this. Okay. If you guys notice, I took profits on my Ethereum IPO ethers, right? Me and my buddy Eric took out some profits to cover our original investments. Let me just get rid of these. Okay, notice this, guys. You guys look at the volume here. See, one thing that's beautiful about trading cryptocurrencies is that the volume is actually real. It's not like in the stock market where they publish bogus volumes for people, okay? Okay, so you guys notice here, pay attention to this really closely, guys. Pay attention to this very closely. Notice how the volume is very thin. There was not a lot of volume the day that Ethereum was open to the public for trading. Right here. You guys see that? The volume, there's hardly any volume here whatsoever. So my buddy Leon, he wanted to take profits at 100. And I was saying, hey, wait a minute, let's hold up here because in my 2016 Bitcoin prediction video, I forgot to drop this down to a 1-hour chart and look at this volume. I made a mistake on that, right? The volume here is so thin that when the price reaches this 100 millibit line right here, this line, it's going to bust right through it because there's not a lot of volume. There's not a lot of sellers there. Likewise, when it comes up to here to 130, notice that if I put my crosshairs there, notice that there's hardly any volume there. There's hardly any volume. Okay. Matter of fact, I don't know if there's a way for me to magnify this. Okay, there it is. Let me magnify this so you guys know what I'm talking about here. This is extremely important, guys. Right? So that this will help you guys hold on to your profits, right? Notice that when we get here, okay, notice right here at the 130 millibit, right here, at the 130, notice that it's the 4th candle here and there's hardly any volume. If I mouse over it, you guys will see that there's, let me see, where's it at? It shows the open, high, low, close up here, but it doesn't show the volume. Okay, there it is right there. There's the volume right there. So right there, there's 2.4 thousand. Not sure what that exactly means, but I don't need to know. I know that the bar is not very high. Okay, you guys see that? So I would be very comfortable. Right now, the price is at, what is the price at right now? The price is at 111. So the current price right now is at 111.19. So it's about right there. Yeah, the current price is about right here. If it runs up here to 130, I would be very comfortable holding on to my trade right past that because there's not a lot of short sellers right here. There's not a lot of volume. All the pre-sellers, Okay, now you got to put yourself in the shoes of the pre-sellers. Like I'm one of the pre-sellers. I bought during the pre-sale. Eric bought during the pre-sale. My buddy Leon bought during the pre-sale, right? Most of pre-sale people have already taken their profits out already. I believe that most of the pre-sellers actually took their profits down here. They actually took profits right around here. I'll show you where I believe that most of the pre-sellers took their profits right around here. Right? The reason why I'm confident in saying that is because right here is where all the volume is at. See all the volume here? It's between like 60 and like 80. That's where most of the volume happened. So if you guys go forward right here, right? Right here. This is the reason why the price was sitting here for so long, going sideways, because the sellers would come in and sell it, the buyers would come in, the sellers come in, and it was back and forth because people were trying to unload their ethers, their pre-sale ethers right here during this whole period right here. So that's where I unloaded my pre-sale ethers as well. Okay. Matter of fact, I unloaded my pre-sale ethers, I think, right about here. Right about here. I think it was either here or here, I forget. No, it must have been here because it was just last week. Yeah, so it's right here. Okay. So if all the pre-sale investors took out their money and to cover their their initial investment, then they're going to be cool with letting the rest of the profits run. I mean, that's what I did. That's what Eric did. You still there, Eric?
Yeah, I'm still here, but I can't type in the box.
Okay. Yeah. So what's your thoughts, Eric? I mean, you took some of the profits out, right?
Well, I'm in the same boat as you. I took them out between 85 and 98, and so I'm in the same boat there. All my positions are covered. My initial investment and then some is all covered. And from here on out, it's basically just dealing with potential. And the
Yeah.
potential we have is also having to deal with the release of Homestead, the release of a whole bunch of other stuff. So not to forget that Ethereum is still in an infant phase. As far as the general public is concerned, and a lot of people are becoming aware of it right now. So I have no qualms with leaving my investment in there to let the profits run. So it's going to jump around a little bit. There's going to be people that are they have fear of missing out in. There's going to be people who are pushing the price around and think, okay, now it's going to tank. Now it's going to tank. But when it comes to watching the volume, watching the direction that the market's going, and also keeping in mind that it's still in the infancy phase, there's still, even if it is a bubble, it's still growing. It's still growing. We're nowhere near the popping point, I don't believe. Just because we're seeing new peaks on a chart doesn't mean we're at the popping point of a supposed bubble. So there's still a lot more to be done here, and I'm not getting out anytime soon. So everything that's in there right now is all profits for me. I'm letting the profits run on a long-term chart.
Yeah, and that's the same for me too, guys. You know, I mean, I already covered my initial expense, so the rest of this is just, you know, initial. I mean, it's just profits, like Eric said. Here's the thing, guys. Because of this run up, there's going to be a lot of people selling here, guys. Okay. If you're a long-term trader, I would wait until it comes over here, and I would take a shot when it comes over here to this side of the trend line, or I would wait until this long-term trend line right here. Right there. Let me make it thicker. If you guys can see that. Because that's what the original trend was at. Right there. You guys see that? So the pink line is just a trend inside the trend. So if you guys remember from my Bitcoin, my Ethereum prediction video, right, I anticipate that the price is going to snap back and retrace all the way back down to here. Okay, that's why I had that purple line in there. Now, with this kind of momentum, I might have to adjust that prediction a little bit because it's so far outside of this dark green trend channel, right? So if I was not in this trade now, from the beginning, like Eric and I was, what I would do is I would wait until it comes down to here. I would wait until it comes down to here, or to this side of the trend line to get in, and then, or I would wait until it comes down and hits this thick green line right here. This thick green trend line, and then take it from there up. So those are the different places that I would look to get in. And you know, guys, things can change, guys. 2-3 days later, if this shoots up, you know, to $10, like who was asking about it? Like Bitcoin, like Rain Lead was asking about, then everything changes. Okay, everything changes. So where am I at here? Right. Okay. All right. Do you guys have any questions about that, guys? Before we wrap it up, guys, was this helpful for you guys? Let me know if this is helpful, and maybe in the future I'll do, you know, this more often. I think there's like a delay too, because at the hotel I'm at, there's some very slow internet. So I think that there's a delay, because I noticed that from the time I ask until the time I actually see the response from everyone, there's usually like a 30-second delay or something like that.
There's a delay between the voice on the YouTube video versus the voice on the Google Hangouts, because I had to mute one because I was hearing you double.
Yeah. Okay. Okay. All right. Let me see if anybody has any questions over here. Okay. So no questions over here. And guys, if you guys miss this move, do not panic and freak out, guys. There's always other opportunities. Okay. The market will be here 1,000 years from now. Okay. Okay, do you think OKCoin is preparing to add Ethereum when Homestead is released? Is this rumor true? Okay, guys, here's what I want you guys to realize, okay? I want you guys to realize something, okay? This is my policy on news announcements and everything, right? So let's just say that I get in right here, like I mentioned to you guys. Let's say that I get in right here, where that green support zone is at, okay? Let's say I get in right here. Where do I get out at, guys? Where's my stop loss going to be? It's going to be underneath it, right? You guys see that? Let's say if I get in right here and my stop loss is down there. Now let's just say that OKCoin adds Ethereum after Homestead is released, but the price runs down and it stops me out. I'm going to get out, guys. Okay? I'm going to get out. Now, let's just say that Hillary Clinton gets elected president and the price runs down and it stops me out. I'm still going to get out. Let's say that Kraken gets hacked. I'm still going to get out if the price hits here. Let's say that, you know, they come out with Fast and Furious 10 and it was a flop movie and the price drops down to here. I'm going to still get out. It really does not matter to me what happens and why the price got down to here. I know that 2/3 of my trades are unprofitable. The other 1/3 of the trades, they are profitable. The 2/3 that are not profitable, when they are unprofitable, I need to get out. Okay? I need to get out. That's all that matters. I've set up an account with Poloniex, but I have not used it yet because I was trying to convert my pre-sale ethers into Bitcoin, and I was just testing it out. So I've been using Shapeshift.io to make the exchange. Okay. Now look at this, guys. See that? Now it's gone back up. See that? It's gone back up, but it doesn't matter because if it would have gone down back down, it would have killed me. Okay. So you can never say that, you know. Oh, by the way, I just want to throw this out there too, guys, before I wrap it up. Remember I told you guys I would get in right here, right? Right there. Here's something I forgot to mention to you guys. If I get in right there and my stop loss is here, guys, as soon as it breaks this high right here, as soon as the price breaks this high right here, if you guys do this, make sure that you guys understand how to put your stop losses. Let's say that you break this high. The candle comes up and it breaks the high of this. Then what I would do is I would immediately reduce my risk to below this candle. And let's just say that this continues up like this, right? Let's say that it continues up like that. If it does that, then I would move this up to here, like that. And then when that goes up higher, then I would move it to break even. So I would slowly ratchet my stop loss up to increase my profits, okay? Okay, Bitcoin volume is 80%. Vitalik. Vitalik is a cool dude, man. I actually interviewed him during the Texas Bitcoin conference with my buddy James D'Angelo, right? I'm gonna probably go see James D'Angelo and bug him in the next couple of days here in Boston. So see what he's up to. Maybe we can do a video of his thoughts on the Ethereum. I like to get his thoughts because he's very technical and insightful about these things. So I'm gonna try to get a hold of James D'Angelo and see if we can do a video. And if I do, then I'll probably announce it on the Trading View and let you guys know to join us. Okay. Yep, trading is all about patience. Trading is all about patience, guys. All right. All right, guys, let me wrap it up here. It's 11:30 here in Boston, Massachusetts, where I'm broadcasting from. And I need to get to bed early so I can get up tomorrow and go and see if I can get over there and harass James D'Angelo here. Okay. And I don't know, Bitcoin Medellin. I'm not sure if Vitalik gets the Chinese involved. That's good for everyone because you know the Chinese, they're not afraid to trade. You know, I hope that I mean anybody that can do anything, you know, to promote Ethereum or Bitcoin or NXT, anything is good as long as it's a legitimate currency. Okay. All right, guys. I appreciate you guys joining Eric and myself on this, and we will look forward to seeing you guys in a future episode of the currency analysis. All right. You got any last words, Eric, before I hang up? Before I stop the broadcast?
Nope, I'm good to go. Thanks for watching, guys.
All right, guys. Hasta la vista, and thanks for watching down there in Colombia. Okay.